21st Century Entrepreneurship with Martin Piskarik.
My name is Jeff Ball. I'm the co-founder of Visio Lending. We founded Visio back in 2012. At that time, we were in the business of buying and selling bank foreclosures all over the United States. During the financial crisis, we were actually buying bank foreclosures from financial institutions and selling them to small investors around the country. And during that time, we bought and sold almost 12,000 single-family homes. We knew that opportunity and that business was going to sunset as the U.S. economy healed. And so starting in 2009 or thereabouts, we began to seed several new opportunities building on the assets of the company that we had already founded. And one of those businesses turned out to be Visio Lending. And Visio Lending provides financing to real estate investors. And so the insight that we saw in the market was that there was a gap for small investors that wanted to buy single-family rental properties. And in 2015, we launched a product that now has become widely available in the market called a DSCR loan. And the DSCR loan is a 30-year mortgage loan that is used to finance single-family rental properties. At that time, there really was not any equivalent in the market. After the financial crisis of 2008, the mortgage industry shrank dramatically, and the type of mortgage products that were available for investors were very, very limited. At the same time, there was a lot of housing stock in the market that needed to be acquired. It needed to be renovated and put back into productive use. And the productive use for that was either to sell it to a homeowner or to put it into the rental stock. And so we faced an interesting decision back in 2016. Because we had bought and sold all these homes all over the country, we had a very interesting operating platform with a national footprint. And we also had a large database of people that were involved in real estate investing. And so on the one hand, we had institutional investors who were interested in us setting up a national construction lender. Basically, think of it as a fix and flip lender that would provide capital to small investors to renovate properties. And so that was one opportunity. The other opportunity that we were more interested in, though, was actually providing permanent finance, long-term finance to investors that were, instead of flipping properties, they were building rental portfolios. We'd liked that opportunity. We thought that there was a strong tailwind in the economy associated with a need for that type of affordable housing solution. And so, as happenstance, some of it was hustle. It actually came through a relationship of mine from a prior part of my career. We were introduced to a large hedge fund out of Southern California that was thinking about the very same opportunity. And so we teamed up with them in late 2015 and defined this product that became known as the DSCR loan, which stands for, it's a mouthful, but it's the debt service coverage ratio loan. And what a DSCR loan is it's a loan on a commercial, it looks like a commercial loan that's written on a residential property. Think of a single family home. It's a 1-unit, 2-unit, 3-unit, 4-unit property. And instead of underwriting the loan based on the borrower's personal income, we underwrite it based on the cash flow that'll come from the property. And this is, for entrepreneurs, for small business owners, this is incredibly valuable because for folks who own their own business, many of you will have experienced the fact that it can be hard to actually get a traditional mortgage, because in order to get a traditional mortgage, often referred to as an agency loan, it's a loan that's guaranteed by Fannie or Freddie, you actually have to have a regular paycheck. That's one of the hurdles. And your tax returns have to look pretty traditional. They have to be pretty straightforward. And for many entrepreneurs, they have a variety of different business interests and they don't get just a single paycheck. And so being able to buy and own rental property can be very, very difficult. And so The DSCR loan kind of works around that. It has simplified documentation requirements, but again, the key insight is that the loan is underwritten based on property level cash flow. So when we started this back in 2016, this is a 30-year mortgage, and the only way you can actually issue 30-year mortgages is if you can match that up with cost-effective long-term debt capital. Lenders borrow money to lend money, and that's the business that we're in. And there was really no place for us to borrow that money from. And so working with this hedge fund, we seeded this product in the bond market, the securitization market. Now, if you fast forward 8 years to 2024, this is there are billions of dollars of this loan product that are originated each year. There are a bunch of asset managers all over Wall Street who buy the bonds that are secured by these loans. There's a bunch of insurance companies all over the country, all over the world that buy these loans. And the reason they buy them is because these are very high quality loans that generate very nice returns for them. And the reason our customers use them is they really help our customers build their rental portfolios. And our customers build their rental portfolios because they're trying to achieve financial independence. If I take a step back and I just, again, to me, some of the interesting insights that I would just share as an entrepreneur related to this opportunity. So my background, I started out as a securities attorney in Silicon Valley. And what that meant is I was working with tech companies. I was helping them either go public or helping them raise venture capital money or engaging in mergers and acquisitions work. And I actually started in the mid-90s working in Palo Alto. From that, I went to investment banking at JP Morgan. And at JP Morgan, I was doing similar things, but I was doing it on the finance side. I was, again, working in that case mostly with semiconductor device companies, and I was helping them raise capital, buy businesses, sell businesses. And so what's interesting is I had a legal background, I had a finance background. I didn't go looking to get involved in real estate. I was actually introduced to the opportunity, the predecessor company to Visio. I was introduced to that opportunity by a client of mine who had become a friend. And he was the CEO of a tech company that we sold to a public tech company in a transaction. We became friends through that process. And it just so happened that when I relocated to Austin, Texas, which was where he was, he and I, we had a good friendship. He was about 25 years older than me. We continued to engage on personal things and investment opportunities. And he was the one that introduced me to this opportunity. And so the opportunity kind of found me. I initially was engaged as an investor. And then this gentleman's name was Jim. Jim asked me if I would help raise some capital. And in the process of raising the capital, I became very interested in the opportunity. And so I did a much deeper dive into the opportunity, ended up joining them initially to raise capital, and then very quickly stepped into the CEO role because the opportunity was big and it required a lot more kind of full-time attention than Jim could provide to it. It was interesting, really early on, what we saw both in the predecessor business and then Visio was this need to be able to connect kind of two worlds. And so my experience and background with working on Wall Street was one audience. And on the other side, we had the fact that we were initially selling properties to small investors around the country. And then today with Visio, financing them. And so it was really this intersection of being able to translate what Wall Street wanted to what folks on the street needed. And so we think of it as very much like bringing Wall Street to Main Street. So there's a lot of smart people on Wall Street. Interestingly, there's so many really interesting, intelligent, and shrewd people on Main Street, but they don't often speak the same language. They don't see the world necessarily in the same way. And so with Visio, I would say at a very high level, what Visio does is it created the transmission mechanism between what Wall Street wanted and what they could finance and what investors needed in order to grow their rental portfolios. And so that was when we designed the loan product that we call Rental 360 back in 2015, 2016. That's really what we were trying to do, was build a loan product that would meet the need of Wall Street, but that would actually meet the very tangible needs of investors on a day-to-day basis as they look to grow their rental portfolios. So, as I look back and like every entrepreneur, we've been through lots and ups and downs. Lots of moments where it was like, this business is going to fail, or we've gone down the wrong route, and we figured it out too late. And so as I take a step back and I look at kind of where did our success come from and what are some of the things that I learned over the course of this. So the first one, and this is just, it kind of fits with who I am as an individual. I tend to focus on a smaller number of things. And as an entrepreneur, I felt the constant pull of new opportunities emerging and constantly having to evaluate, okay, new opportunities, is that a better opportunity than what I'm currently focused on? And I've just, Visio, we only do one thing. And we're actually unusual in the country that we only do one thing. We finance single family rental properties. We've had lots of other opportunities come at us over the years. Many of them have been very attractive. And we try to be thoughtful about, I think of it as like a sandbox. I try to define my sandbox and what it is, what's inside of our sandbox, so that I can thin slice. If something is outside of the sandbox, I can very quickly say, no, that's not for us. For example, if somebody came to us and said, hey, we're very much interested in you being a fintech company. This was something at one time, everybody said you need to position the business as a fintech company. We aren't a fintech company. We are a lender. That's who we are. I could thin slice that and say that's outside of who we are. If something is closer to inside of our sandbox, meaning it's related to lending, then I put it on a maybe list, and usually it turns into a maybe but not now list. But so, for us, I would just say we've originated more DSCR loans than anybody in the country. And I think that's largely because we only do one thing, and we've focused on trying to be as good at that as you can be. And so focus has been one of those things that it's like this constant pressure to consider other alternatives. And psychologically, it's hard because you don't want to make a mistake. You don't want to miss an opportunity. But I would just say in terms of my own personal success, focus has been a huge part of why we've been able to achieve what we've achieved. And, what we hope to continue to achieve in the business. The second thing that I would, as I reflect on success for us, and I continue to deal with it every single day. Yeah, it sounds a little bit cliche, but who you surround yourself with is it's just probably for me, it's probably been the most powerful determinant in my career, and including my entrepreneurial success. As I shared, I was introduced to the predecessor business through a former client of mine that we just developed a relationship. I was his investment banker, and so I was advising him at one time, but then we became friends. And he was a very high functioning individual who I learned a lot from. And so he had a huge influence on, my ability to just kind of, both grow in terms of my leadership skills and my management skills, but also the network of people that I interacted with. But as I became an entrepreneur, it's interesting. I came from, as I shared with, I started out as an attorney, and then I was an investment banker at JP Morgan. That's a very homogenous environment. Everybody's extraordinarily high strung. They're all type A's, overachievers. And when I started to work as an entrepreneur and building, these two businesses that I've been involved with, we had a much more heterogeneous work environment in terms of what motivated people, and learning to become a much more intuitive and empathetic leader, where I could actually, instead of asking people to meet me where I am, I learned to actually try to understand where they are and meet them there. That was very critical. When I led people at JP Morgan, I understood everybody because they were wired exactly like me. I knew what would motivate them, and I knew what would discourage them. And so it was not complicated. But for me, developing that soft skill, that idea of being able to, still be authentic, but to meet people in the way that they need to be met, is incredibly important. And I'll give you an example. Today, one of my senior leaders is incredibly action oriented. A conversation that lasts more than 2 minutes is frustrating to him. So for him, I get right to the point as to, this is what we're talking about. This is what we need to resolve. We resolve it and we move on. We have a good personal relationship, but he doesn't want to talk through a lot of the pros and the cons and get it mixed up in a lot of sausage making. And so, whereas I have other team members who, if I had that approach, they would find that to be too abrupt, and didn't give them sufficient time to kind of talk through what all the issues are and weigh those and make them feel fully heard before we come up with a decision or an action plan. So, I think the people, learning the people skills in a much more diverse work environment, I think has been really critical. The other people issue that I think I struggled with very early on in my entrepreneurial career, and I made mistakes, I made plenty of them. I got the wrong people on the bus with me. Jim Collins in Good to Great talks about getting the right people on the bus and the wrong people off the bus. And at times, as an entrepreneur, I would rush the hiring process. I just learned that making a hiring mistake is incredibly costly. It takes a long time to sometimes, not always, but it takes a while to figure it out. And then it becomes very painful in dealing with it. So, I think for me, one of the things I did, and we've now had in place for a number of years, is I slowed the hiring process down. And I think I picked this up. I believe I listened to a podcast related to Zappos and how Tony Hsieh was handling hiring at Zappos. And it was a very intentional process that was like methodical in terms of it slowed it down so that folks within the process, my team members, that they couldn't rush through the hiring process. And it kind of balanced yes, there needs to be a sense of urgency in growing the team and getting the right people on the team. But there also needs to be an equivalent. If you slow the process down a little bit, it's interesting how it helps people make better decisions. And this was the part I don't think I fully appreciated at the time, but it starts to actually bind the new team member to the company. They get a sense of how important team is through that hiring process. I get this all the time. People say to me, because I interview every single person that we hire. I do the cultural interview at the end, and I get this all the time. They're like, you guys are super thoughtful about how you do this, and I really appreciate the process of getting to know some of your team members and the thoroughness by which you engage in this process. And so as an entrepreneur, like when you're go, and you feel like you got, too many things to do all the time, rushing hiring feels like it's a good decision. But I learned the hard way that, from the mistakes that I made there. we're actually headquartered in Austin, Texas. Pre-pandemic, we were in the office all the time. We're now largely remote. But one of the things about building Visio that was so challenging is while there's a lot of mortgage talent in Texas, most of it is located in Dallas, Houston, or San Antonio. So as we were building Visio, and at this time we were trying to build the team in Austin, it was actually really hard to find experienced mortgage people who wanted to work for a niche startup that was trying to break into this new field. And so after trying a couple of different strategies of trying to lure people to join us and come to Austin, we decided that we would grow talent internally. And so what we did, one of the great things about Austin is we have a bunch of really high quality universities in and around the area. And my directive to our recruiters was, I want athletes. And when I say athletes, what I was really looking for was people who had demonstrated intelligence, ability to learn, curiosity to learn, that we could bring into the organization, and we would start a program that would bring them in at the bottom, train them in tasks. As they became familiar with tasks, they would then start to learn about the more nuanced issues associated with the business, and we would move them into roles of increasing expertise. And so, what I told our recruiters, as I said, it can be a recent high school graduate or a recent college graduate. I'm looking for somebody who has demonstrated intelligence and ability to learn. I want readers. I want people who like to play board games. I want people who have a certain kind of creative bend to them, and find those types of people. And but importantly, find people who have demonstrated ambition. So we love folks who came from military families. We love people who put themselves through school, those sorts of things. And so, and here was the observation that I had. I was lucky in terms of my parents were highly supportive of me, and somehow through a combination of just good fortune, I found my path to a productive and successful career. But as I interview a lot of these folks, what I encounter is, my Lord, these people are incredibly smart and talented. They just haven't had anybody to give them some direction and opportunity. And that was really what I saw, was that there was a mutual opportunity for us to build a very talented, very skilled workforce, where we could give talented people the opportunity and pour into them, that they could learn what it's like to work within a business. And eventually, today, many of our leaders actually started in this program. Some of our most senior leaders started in this program. So we have been a part of helping train them in the mortgage industry, but to train them in management, to train them in leadership skills. Many of them work in helping shape and define things like our technology strategy. So for me, the greatest, I love that we have a successful business, but more than anything, it's so much fun when I spend time with one of our senior leaders, and I think to myself, I remember when this person started in an entry-level role for us, and today they manage 25 people that make some of the most important decisions in our business. It's the part that, I probably take the greatest level of satisfaction from. And I've said this, for years in our business. I just want our team members, when they leave our organization, that they leave it better. I don't expect them to join us forever, but I want them to have left with good experience. And that includes both professionally, but also, we expect every single one of our managers to do one-on-ones with every one of their team members. And a part of that is, it's not just what is their to-do list, it's what is their development plan. And often that's related to something specific in the workplace, but it could be other things, like just other things in their lives that they're working on. And so, yeah, it's, I think when I take a step away from this, the imprint, hopefully that, or imprints maybe overstating it. I think I just hope that for many of our team members, that they'll say, hey, working at Visio was a great experience in that I worked with a bunch of really smart, talented people, and I learned a bunch about the mortgage industry, but more importantly, I learned a lot about what it means to be a productive contributor to something. Visio today is really continuing to redefine this space of financing single-family rental investors. We introduced the product. We have grown it into something that now there's much greater support in the capital markets. And so now the question is, how do we take it to the next level? So for us, we expanded. Initially, we only financed long-term rentals. Today, we're a huge supporter and financier of short-term rentals. Think of things like Airbnbs and VRBOs. And we just think as the market of owning single-family rental properties continues to grow, that this is going to be a bigger part of people's investment portfolios and a bigger part of their retirement strategies as we move forward. And so, we're just incredibly excited. The served market for us continues to expand as we've done more of this, and the pricing has gotten more competitive because there's been more support in the capital markets. So, I think I would have told you 5 years ago that I thought the opportunity was, X billions of dollars a year. Today, I think it's probably at least 5 times what I thought it was. And I think that opportunity could continue to grow. And interestingly, the U.S. is very much a kind of a thought leader in the mortgage space. So I think, what happens in the United States, the rest of the world kind of pays attention to. So, owning rental properties is not unique to the United States. That exists in countries all over the place. And so I think, there's further opportunity for us to continue to innovate and find new markets to help folks, build their wealth and achieve financial independence through owning rental property. Yeah, so if you want to learn more about Visio Lending, and more importantly, if you just want to learn more about how DSCR financing can help you grow a rental portfolio, I encourage you to visit our website at visiolending.com. It's VISIO lending.com. We have an extensive blog there. We're big evangelists of just how this product works. Yes, there's lots of information about us, but there's just a lot of information that can help you learn about the ins and outs of owning single-family rental properties, whether that's long-term rentals or short-term rentals. We put it out there, because we're advocates for how this asset class can help you achieve financial independence. And we want you to do it in a way that meets your long-term needs. So we believe in being, educators and evangelists around the product. For us, successful investors means successful borrowers. So I encourage you to visit our website at visiolending.com.
21st Century Entrepreneurship with Martin Piskarik.
Imagine a space where triumphs, trials, and tales of entrepreneurship come alive. Welcome to the 21st Century Entrepreneurship Podcast, a gold awarded journey hosted by Martin Piskarik, connecting with listeners in 95 countries and ranking in the top 0.5% of all podcasts. Join our exclusive community, elevate your perspective, and embark on the path to success.